You want me to give you stock advice?
Yeah.
How much are you going to pay me?
How much do you want?
How much do you have?
I have a lot. How much do you have?
Really? I advise billionaires. What kind of assets are you working with? 100 million? 500 million?
Property. I have property.
How much money do you have?
How much money do I have?
Yeah, to invest.
I mean, to invest probably 20,000.
Yeah.
Right now.
I don't think you understand what the words "have a lot of money" means.
I mean, I don't have a lot of cash on hand, but I have money in assets.
You want me to give you stock advice? You have $20,000.
Yeah.
You got to be kidding, right?
I mean, no, I'm saying I want to invest 20 grand right now.
You understand that what you're saying is ridiculous, right? Like, if you offered me millions of dollars for investment advice, I wouldn't take it. You have $20,000. Why would I help you? Are you crazy?
Like just advice.
What do you think? My time is worthless?
Like you're sitting down.
You understand? I manage a hedge fund, right? People paid me a lot of money for advice.
I'm only 19. I don't have like.
I mean, you understand how stupid you are, right?
I mean, yeah, but I just want.
Go find a financial advisor you can afford.
Okay, if you don't want to help me.
Learn how the real world works, dude. Why would I help you for free when people pay me money?
Because I mean, what do you have to lose?
My clients. If they can get it for free, then I lose them.
I mean, I didn't think you're still working for a hedge fund, no?
I don't work for a hedge fund, but I have to protect my investment ideas. I'm not going to give them away for free to you. You think I'm going to call Michael Jordan and ask him for basketball lessons? You how to play in the NBA, Michael? Here, let me call Tiger Woods. Let me call Tiger Woods and arrange a private golf lesson. Then I'm going to call Kanye West, and he's going to teach me how to make beats.
Okay.
It's going to be great. I don't have to pay for any of it. You're the most naive kid I've ever talked to.
Hi, Martin. I have a question for you regarding tax cuts.
Regarding what?
Tax cuts.
Okay, go ahead.
Trump's tax cuts have been reduced, I believe, by about 5%. Do you think that's going to cause another recession, or do you think that will cause an expanding of growth in the middle class?
See, like I've said many times, I mean, I'm not an expert in taxes. It's a whole.
Oh, I thought you were.
No. Let me give you some thoughts. And during this period, you will be quiet. So, with respect to taxes, again, economics, fiscal policy, monetary policy. These are all things you can study for your entire life. There's no easy way to determine whether or not a tax cut policy will benefit the economy or not. In fact, by the time that the policy is enacted, there's so many countervailing variables that it's almost impossible to determine the efficacy of any specific policy. 𝗟𝗏𝗡𝗏 posited that lower tax rate will actually increase tax revenue. And the famous Laffer curve was invented or discovered, some people might think. So with any respect, the point is that I think that we should err on the side of the smaller government and less taxes. I think it's the rational thing to do. I think the government has proven to be sort of inefficient. Obviously, there are things that we need, like a military and other branches of our government that are important, that'll never stop sort of being there, but systematically increasing the size of the government is something that in my opinion, needs to stop, especially with respect to our upside-down balance sheet and our upside-down income statement. Income statement suggests we spend more money than we're bringing in. The balance sheet suggests we have a lot more debt than we have cash and assets. That's an unsustainable situation. That's why I'm a Republican. With respect to everything else, again, I don't like social justice warriors. I don't like people who whine about, all kinds of things. I do think we have some inequality. I do think we have some problems that we need to solve, but I don't like the media and I don't like lying about those problems. So in any event, with respect to tax cuts, I think taxes themselves are less important than spending. Spending is where I think our country goes wrong. I don't know if you want to add anything.
No, that's actually what I was thinking, but I wasn't curious on your opinion because you are investment, so I was curious how you would view on the tax cuts because I can't gauge how he's going to, if he's going to raise them such huge amounts of money.
I can only tell you from my personal perspective, right? So I started touring pharmaceuticals because, again, I'm not, people like Ben Bernanke and Alan Greenspan and people that work at the Fed, people that work in the Treasury Department, they studied this for their whole lives. They've studied other governments. They study our government. I haven't done that. I've studied pharmaceuticals. That's my day job. So from my perspective, I'll give you one little vignette, which is that I started touring pharmaceuticals in Switzerland because their tax rate was 11%. I would have started in New York if our tax rates weren't 35%. So the delta, the pain of starting a company and bringing it to Switzerland and giving Swiss jobs, high-paying Swiss jobs, bringing those tax dollars to Switzerland instead of the U.S., if there was a 20% tax rate, I would have said, you know what, it's not worth it, having an office in Switzerland, having to go to Switzerland, all that stuff. But when it's 35%, I said, I'm going to go through the pain of building a company 4,000 miles away just so I can save some money. I think that if we lowered U.S. tax rates, we'd have more companies bringing back jobs into our country, and I think that's a fact. I do think we need to cut defense spending. I think we need to cut all kinds of spending, but again, how we do that is going to be a tough problem.
When you're an investor, one of the most important things is to come up with a game plan that works for you. That's really hard to do because you don't know if your game plan is spuriously successful results or spuriously negative results, right? You don't have an assay to determine true positives, false positives, true negatives, and false negatives. And you have to sort of figure out how to assess that. And I think one of the best ways to assess that is actually with peers, right? So you might have a strategy where you long all the stocks from A to M and short all the stocks from N to Z. And you have this amazing results with a great Sharpe ratio, but with your peer might say, listen, this is really spurious. You're not doing well, right? You may challenge your peer, you may not, but I think that, you need some ability to look at the ground structure, I guess the structural dynamics or what do the people call it now? The Elon Musk way of thinking. I just called it structural dynamics. First principles. There you go. Yeah. So that's sort of what I'm talking about. You have to have some sense of first principles that work for you and that are reasonable. And then I think if you iterate off that, you'll be fine. If you're taking a quantitative approach where you are working with machines very heavily to make your decisions, I think that's a different story where, but you're talking about retail. I think that retail can do better by focusing, even though like you said, the literature would suggest that it doesn't make sense to focus on things that, are known by markets. I still think it's an improvement over most retail investors' frameworks to try anyway. And I think that it's far from true that the literature leaves a lot to be desired, I think, for obvious reasons. A lot of the people who write the economic papers and the reviewers and so forth, there's kind of this gestalt and edifice that's been created that's probably not moored in reality to some extent. So I think, I respect the academic workers, but I also respect the reality that we see every day, that there are good traders out there, that their processes are replicatable. There are good investors out there. So it's important to read the literature, which nobody does from the practitioner standpoint, but it's also important to have conviction in your own path, especially if it's working. So it's a tricky question. I don't know if that helps at all. I think beta is sort of your enemy, but there is sort of this like recursive or self-defining problem with the whole idea of beta and alpha, right? If your model as a non-quant, right, you sort of don't have to worry about that. But if you are working with factor models, Fama-French type work, then you do have to worry about that. And I think that it's hard to say. Again, I'm not a quant, so for me, my method works for me, and I sort of have the Warren Buffett approach of, I wish everybody else all the luck in the world, but I don't really care what you do or how you do it. It doesn't mean I want to permanently ignore the literature forever. I think it is important to understand some of the more technical pieces of finance. It's really enriching. It's fun. Some of it is a waste of time. A lot of academics are not successful investors. So there is a bit of that kind of, sneering at the publishers, as sort of like, real practical work where, if their work was useful, they would make an investment vehicle and make a lot of money. And I think that academics have a hard time doing that for obvious reasons. Some of it's stylistic and preferential, but some of it's reality where they just can't do it. So again, I'm not opposed to the literature at all. I use the literature in every other field I'm in. So, but for whatever reason, I've always found that economic literature to be a little bit just less useful, maybe not useless, but just less useful.
What's up? That last dude that had like 20 grand to invest, you know, like all right, I got some big bucks though. I'll give you 33% fee.
Yeah.
I have $3. Now you can take that fee and invest it in Kanye's next album.
All right, we got the master plan on deck.
Word. I know it's kind of risky, but that's what you're into, right?
It's not risky. The most money I can lose, it sounds like, is $0. How's it risky?
No, it's risky for me.
Okay. Well, I don't worry about other people's risk, my man.
No, I mean I honestly don't. I got way more money than $3. I got like $5.
You need to work in your comedy lessons. Go spend those $3 and buy a comedy book.
All right, peace.
Because you corny. You need to buy some jokes.
In terms of corporate tax rate, what would you say is a fair balance between, giving businesses freedom and, government revenue?
I mean, I'm not an expert in this stuff, but I think 25% would be a really welcome tax rate. It would save companies a lot of money, and it would put more jobs in America. I know I would close down my foreign offices if we had a 25% U.S. tax rate.
Do you think, wouldn't a rate like that still be, I mean, obviously this is not so much true of the pharmaceutical industry, but especially in other industries, a rate like that, you can't truly compete with a lot of foreign countries.
I don't know about that.
Lower.
Like what? Like where?
I don't know, a country like Ireland or Bangladesh.
So Ireland is changing quite a bit. Ireland and Netherlands. There's always going to be some country that has this gambit of saying, "Come to us, you'll have free taxes." It never works in practice. We looked at Ireland and we realized that the rest of the EU is pressuring Ireland very heavily. So now there's no double Irish loophole, and a lot of companies are regretting moving to Ireland. It's a small country. The workforce is limited at best, right? So you can, so re-domiciling to Ireland is not in most companies' best interests, especially for a tax rate that's shifting. It was 5%. It was 0 to 5%, but that's changing quite a bit because Ireland having a 0% tax rate, you get some jobs, but you still want revenue. And then you're pissing off every other country around you that says, "What are you doing? You better raise that tax rate or we're going to block you and sanction you." And in essence, that's sort of what's happened. So Ireland's now starting to abandon some of those things and phase them out. It's too unstable. Ireland's tax policy has only existed for a decade or two, whereas Switzerland has had its same tax policy for literally hundreds of years. So if you go to the Cayman Islands or something like that, remember, you actually have to build a presence there, right? That's the downside of having a redomiciled company. And I've done more research on this than almost anybody, just given the magnitude of my own businesses. It's very hard to have a company in Bangladesh. Could you imagine flying out your private jet to do a board meeting in Bangladesh, decrepit, city in Bangladesh? It's a ridiculous concept. You can have entities there, but due to the pass-through income laws, there's no benefit of having an office in Bangladesh unless it's your parent company. So with respect to a parent company location, your choices right now are Ireland, Netherlands, the United States, Switzerland, or if you're crazy, you can do, Germany and France, etc., are parallel tax rates to the United States. They're in the 40% type range. And again, they deter jobs. I mean, tax rates are so high in France that there's virtually no entrepreneurship. I mean, virtually none. The U.S. is just such a great workforce that we have entrepreneurship in spite of ourselves. But more and more, these companies are doing the Irish-Dutch thing to avoid taxes. And again, those countries have to pay the price down the road of pissing off their neighbors. Because if Netherlands has literally a 0% tax rate, and on its border, Germany is a 40% tax rate, Germany's not happy with Netherlands. And that may not be apparent over 1 year or 2 years or 5 years, but over 10, 20, 50 years, they're gonna start putting pressure on them to increase that tax rate. And when you're that company that is the last company to move in, and of course you spend all this time and money moving to Netherlands, and all of a sudden you have a 35% tax rate, that's painful too. So I think a 25% tax rate keeps us in the middle of the pack. It's more than your tax dodging countries, but you're paying for a great workforce, a huge country, geographically diverse, the best country in the world, and you're still a smidge below kind of where the rest of the world is. I think that's a nice place to be, and it would at least stop people like me from trying to leave the U.S.
That was a very good answer. I really appreciate it.
My pleasure. Thanks for your question.
Yeah, like what made you so interested in stocks when you were a kid? Like just because you thought of it as fast money? Like your father gave you a stock account? Like how did you get so into it?
Even before then, I liked to read the newspaper, and my dad most of the time bought the New York Post.
Yeah,
and New York Post is a lot easier to read than New York Times. And
easier in layman's words.
Yeah, even a kid can read it. So you start in the back of the New York Post because that's like the front page because it's a sports page.
Yeah,
and even kids like sports, and I was a normal kid that likes sports, and you read backwards, and then eventually after the final tables for the NBA, you get to the stock pages.
Yeah,
and the stock pages look just like the NBA pages.
Yeah,
because
that's right.
It's just numbers.
I remember the sports guys, you would see what the cards were worth.
Sure.
And it was just names and numbers.
Yeah, that's true.
It's the same thing.
And you look at it and say, oh, Microsoft, I know what that is. It's a computer company. And you sort of slowly kind of say, oh, I've heard of Walmart, or I've heard of you pick a company, Gillette. I know what that is. My dad uses Gillette. And you sort of get fascinated by the fact that these are numbers moving up and down. The same way you might look at the games and say, oh, I think the Supersonics are going to beat the Pistons because they had a better team. Well, I think Gillette stock's going to go up, and maybe Compaq computer stock is not going to go up. And it's just sort of fun. As a kid, I was fascinated with these numbers constantly moving. When I was a kid, I used to collect baseball cards, and I'd like
same man. I think we both have great. I mean, I'm not showing off, but we have great memories, and we like to make connections between things. So I think trading cards, stocks, it's like.
Well, I particularly love numbers. So like for me, I'd love to sit and. In my mind, I would guess I have baseball cards, and they have the batting average, and I have these dice. And depending on how many dice you use, you can approximate any percentage average. So like you could guess the batting average. And I'd play like these stupid games with like pennies and quarters of like pretending to play baseball. And when I was like 6 years old, and I love numbers of all kinds. So the stock market is a little more advanced, a little more complex, but at the end of the day, it's still numbers to analyze. And some people, what amazed me in Brooklyn is that you had people that were so obsessed with the Yankees, the Mets, and they had no impact in your life, whether Don Mattingly.
I said the same thing. I stopped liking sports because when you finish high school, I started to think, oh, you're into girls and making money, but I started to think, wow, the players don't really care about me.
No, they don't.
I moved on to making money and going out and stuff.
Yeah, the number of home runs or base hits that Don Mattingly or Wade Boggs would hit for the Yankees back in the 90s. It didn't matter to me. I want to get an A+ because, the Yankees won or lost. So I decided to say, let me think about myself. Of course, I still enjoy baseball and basketball and everything like that. But
my main focus.
I think to obsess over it is a little, for something that has nothing to do with you is a little bit strange.
All right.
You can buy the bonds or buy the stock or hedge. We call that capital structure arbitrage. You would buy... if you're looking to borrow money, you sell bonds, right? If you're 𝗕𝗘𝗢𝗢, for instance, you're trying to buy another business, you can sell bonds to do so. I'm looking at these bonds as interesting. This company, 𝗕𝗘𝗙𝗀𝗀𝗧𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏, they're in very big trouble. These are the 6% bonds. I was looking at them last week, and they were trading at 81.70. Now that looks like they're trading at 82. So they trade like a stock, but it's paying you a thick, juicy, creamy dividend. That's called the interest payments. You can trade bonds on interactive brokers. It's pretty good. Bonds are more senior, so if anything bad happens to the company, the bonds get paid first. The equity gets paid last. That's why in bankruptcies, bonds recover 50, 60, 70 cents. Depends, of course. Could cover no cents, could recover 100 cents, but the equity is very risky and vulnerable. Equity is just a piece of paper, it can get canceled. But if you're the senior secured lender in the company, you're sitting pretty. Now, bonds aren't exciting. If you're Johnson & Johnson, senior lender, you're not getting way much more than treasuries. And if you get in a bad situation like Concordia, Even your bonds won't save you. The bonds become more equity-like as they get more distressed. But, you know, I'm looking at these 𝗕𝗏 bonds, and it looks like to me I'd rather, astonishingly, the 𝗕𝗏 bonds could be a short, to be honest. You can short bonds too, for what it's worth. A little more complicated. Let's see, these bonds expire or mature in 2024. That's when you get your money back. So that's only 7 years away. And they're yielding 2.34%. So that's pretty low yield. That's not that much more than the treasuries. Now these are euro bonds, so they are quite a bit different. Should mark that down. Trade euro denomination bonds, so they're a little higher yield because they're paid. Everything's paid in euros. Okay, so the yield's backed up quite a bit. Back the yield up. You know that old song, "Back the Yield Up"? Do a risky bond, back that yield up. They don't compound, they'll pay you the same, they pay the same interest rate. There's FINRA's website. You can look at bonds, FINRA. Alright, so that's interesting. There's Mylan's bonds are also going all over the place. I'm looking to buy some bonds. The Endo bonds are interesting to me. Mallinckrodt has some interesting bonds. You know, they're very weird. It's not a great asset class for me.